This is not financial advice. I'm recording my thoughts about Shopify. Shopify just dropped about 15% after they announced their Q4 2022 results. It is currently trading at about $44. For the full year of 2022, they grew their revenue by about 21% to make about $5.6 billion. When you look into the growth in 2020 and 2021, this is nowhere near. The growth in 2020 is about 85%. And in 2021, they grew their revenue by 57%. So obviously the growth is decelerating. During the pandemic, a lot of people have opened Shopify account. They paid for the subscription and then they used Facebook ads to get orders and then fulfilled them through drop shipping. So they made a lot of money during the pandemic time. But now, since they're not making as much money, they're canceling their accounts. So the growth rate definitely has decelerated to 21%. And if you look into the gross profit, this company has gross margins in the order of 50%. And as you can see on my screen, the operating expenses are sky high. They are nowhere near profitability. And when I look into the outstanding shares, they're slowly diluting us. In 2020, they had about 1.196 billion outstanding shares, and now they have 1.266 billion outstanding shares. So they're definitely diluting us through stock-based compensation. So let's look at what they're saying for the next year. In Q1 of 2023, they're predicting high teen percentage. So when I say high teens, maybe it's 18 or 19%, right? So the growth rate in 2022 was 21%, and in 2023, it seems like it's going to be under 20%. In addition, they said the stock-based compensation would be in line with what they had in Q4 of 2022 during Q1 of 2022. So now let's get to the question of whether to buy this stock, because the stock has dropped about 20% and it's currently trading at $44, right? If you look into my previous videos, I have predicted close to $50 price target 5 years out, and I have said it could be a buy in the high 20s. Now, since the revenue numbers are out, I want to do another evaluation. The revenue in 2022 is 5.6 billion, and the estimated growth rate, I have assumed 20%. Remember that they grew 21% in 2021, and this year they're thinking about high teens, right? So, but I'm still being conservative by assuming 20% average growth for the next 5 years. So with that, they would have about $14 billion of revenue in 2027. Since their gross margins are in the order of 50%, I can assume 20% net profit margin, with which I can get to about $2.8 billion of net income in 2027. And for a company that's growing at 20% and net profit margin of 20%, I think 25 multiple is a little high, but I'm going to keep 25 multiple, with which this company would be worth about $69 billion in 2027. If you look at the stock count, number of outstanding shares, they have about 1.27 billion now, and I'm assuming 3% dilution for the next 5 years. And if they do another offering, it's going to be even more. But at the moment, I do not know if they're going to dilute the shareholders more. Maybe they'll get to profitability within 2.5 years, and they do not need to do any more offering, right? So with 3% dilution, the outstanding number of shares would be about 1.398 billion. And when I divide the market cap with the number of shares, I get a $50 price tag for this company in 2027. But wait, now it is already trading at $44, right? So that's about 11% gain in 5 years. So you can play with the numbers here, but I do not see them growing more than 20%. Like even if you put 25%, I bet you would not get a good return on this company. So when I look into the stock at $44, I would say, why bother? If it gets to less than $30, like let's say $25, I'm looking at 100% gain with reasonable risk in 5 years, right? So that is an attractive entry price for me, $25 or less. If you own Shopify stock and you are planning to buy more at this price of $44, I would love to know your investment thesis and assumptions.